Time now to catch up with the latest business news, and for that we're joined in studio by our business editor, Stephen Carroll. Stephen, we're going to start with the latest results from Google's parent company, Alphabet.
Yeah, that's right. Now, Google is the dominant player when it comes to digital advertising, and these latest results show another increase in the company's revenues for 2018. But its profit margin fell as the online giant spent more. Now, that's increase in capital spending jumped by 90% last year, a big focus for investors. Alphabet investing more in YouTube, cloud computing and devices. Investors focused on this spending spree. The company's shares down over 3% after hours. Shirley Sipman has more.
2018, another year of growth for Alphabet. In the fourth quarter, Google's parent company's revenues were at $39.3 billion. 22% higher than a year earlier. Alphabet made a profit of $8.9 billion. Figures that were higher than expected as Google continued to dominate the digital advertisement market. Still, investors were concerned by another part of results: spending. $6 billion in research and development. That's a 40% increase. Alphabet hired 18,000 people in 2018, including engineers set to develop tomorrow's technologies. Among Alphabet's top spending increases, video sharing site YouTube. Costs are rising due to competition for content. But YouTube also generated revenue, and Alphabet's CEO has hailed one of its latest hits, Ariana Grande's Thank You Next, which premiered on the platform. Alphabet also invested in other areas, including driverless cars, cloud computing, and hardware devices like its Pixel phone, an area where Alphabet has lagged behind its competitors.
There's less than a month to go before a truce in the US-China trade war expires. Without an agreement, President Trump has threatened to more than double tariffs on $250 billion worth of Chinese imports. But now the UN's Trade and Development Agency says that move could trigger an economic downturn. The Conference on Trade and Development says that $200 billion worth of commerce will be lost between Beijing and Washington if the tariff hike goes ahead. And it says the European Union could stand to gain up to $70 billion of that. Well, let's take a look at what's happening on the markets for you next. Here in Europe, share markets opening up at the start of trading. The oil company BP is trading up 3.7% at the open in London. That's after its latest results beat expectations. Profits there almost trebling in 2018. That's the picture across the European markets. In Asia today, a much quieter day. The markets closed in many places for the Chinese New Year. Hong Kong and Shanghai among those that are closed. The Nikkei in Tokyo finishing the day in the red, but Sydney's share market seeing a gain of almost 2%. On the currency markets, things pretty quiet as well. A euro trading for $1.14 and just under 88 pence sterling. We'll go back to Australia now, where bank shares have rallied after the publication of an inquiry into misconduct in the sector. Investors deciding the investigation wouldn't fundamentally change the banking market over the long term. That's despite the Australian government agreeing to act on all 76 recommendations from the Royal Commission's report, including beefing up regulators and compensating victims. The Hayne inquiry revealed a host of scandals at Australia's banks, including charging dead clients fees. Now, the British government has approved the extradition of the Indian business tycoon Vijay Mallya. The former owner of businesses including Kingfisher Beer is facing fraud charges in India. He left the country in 2016 after his empire collapsed, and he defaulted on debts worth more than €800 million. A London court ruled in December that he should be sent back for trial. Mr. Mallya has 14 days to appeal the UK government's decision. The messaging service Slack is preparing for a stock market launch in the United States. The company filed documents with US regulators, which may see it go for a direct listing, an approach pioneered by Spotify. This is where a company goes public without issuing new shares. US media reporting the flotation could happen within months, with Slack valued above $7 billion. Finally for me, having too much money rarely a problem for most of us, but bankers at JP Morgan have been busy coming up with ideas for Apple and how it should spend its $245 billion cash pile. Analysts at the bank speculated that Netflix, the speaker maker Sonos, or the video game developer Activision Blizzard would make good purchases for Apple. JP Morgan says that Netflix is the ideal fit for the iPhone maker, but warned that it would be an expensive purchase at around $190 billion. Netflix or Apple haven't commented on these ideas, but you know, it's nice to get a couple of ideas for what to do with your spare cash.
Indeed, and what's 190 billion when you have 245 of them? Stephen Carroll, thanks a lot for that business update.